What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button, and if you enjoyed this video, make sure you subscribe and hit the notification button as well. That way you're alerted to when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps as well. So if you want a deeper dive into exactly how we set up our charts, broadening formations, levels of support and resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you are not familiar with this strat, make sure you check out the description of this video. We've got a link to a free PDF with a quick reference to basically how the strat works. Gives you all the basics, strat reversals, broadening formations, things of that nature. So make sure you check that out. So I do encourage you to watch the full video. We do give triggers and targets for, especially for short-term time frames, but we do analyze price action on all time frames. So some pretty good information. So let's go ahead and check out the agenda for today's video. We'll go ahead and recap the price action from Friday, February 6th. Then we'll zoom out like we always do, look at the week, month, quarter, and year price action for SOXL. Then we will look at the market maker's expected move for the week of February 13th. And then we'll zoom back in to set the 4-hour markers and triggers and targets for Monday, February 5th, along with the week of the 13th. And then we'll do a quick review of the triggers and targets for the month, quarter, and year. All right, so let's go ahead and start out on the 5-minute chart like we always do. This is how we take advantage of the proven and repeatable strategy that we use, basically for early morning scalps or early entries into longer day trades, right? So the general rule is we look for the opening print or the first traded price of the day, and we look for higher lows at or above the opening print to get into calls, targeting overnight high and previous high a day. Or we look for lower highs at or below opening print to get into puts, targeting overnight low and previous low of day. So we can see here on the chart, we had an opening print here at 56.40, and that was just a slight gap up from the previous high a day. So we can see that we did get a little bit of a wick to try and close that gap. So not a lot of left of that gap, but there is a slight gap left there. And you can see that we pushed up to last week's low, which also coincides with this week's flip, or the price level that determines whether the week is red or green, right? So 59.51, if we're above it, the week is green. If we're below it, the week is red. So you see we pushed up to that level, wicked slightly through it. We've got an hourly downtrend line that's coming through here as well that basically intersects with this the week flip and last week's low. So we did get a little bit of resistance there, and we got that pullback, but only to that overnight high. Found support at overnight high, which is also above the opening print, and that's where we went ahead and entered calls, right? That's our higher low at or above the opening print. So once the candle, once the candle to the candle following this this green 2 down that found support on overnight high, we went ahead and entered. This also coincided with the market maker's expected move high. So there was a little bit of added risk there from that perspective. Like we talked about in last night's video, about 70% of the time, the market makers are right, and price stays within that range that they've derived from the options chain. But in this case, we had a lot of momentum this morning. The breadth and vol QD, all the internals were already opening in trend higher zone and only pushing up. So had all the right signals for to enter calls. And you can see we pushed up, did get a little bit more resistance here. Once again, where the 1-hour downtrend intersects with the week flip and last week's low, causing slightly more resistance. But we did find support on last month's 50% level, this dashed green line. And we did get that higher low, continue to push up for that higher high, higher low, higher high, higher low. Just basically continued a melt up of sorts till we got to another 1-hour downtrend that was from even further back. than this previous 1 hour downtrend. Actually, I'll show it here when we get to the one hour chart, but we have this monthly broadening formation here that also gave some resistance, and we continued to move sideways but slightly up until we got to basically at the end of the day where this 4 hour downtrend line intersected with this monthly broadening formation, and basically price action had to stop there because the market closed. So looked like we probably could have continued melting up. Internals were still pushing up at the end of the day. Matter of fact, let me just bring out internals. And when I say internals, this is for the QQQ. But we can see tick never got below zero line, right? And if it did, it just barely did. Vol QD, obviously, trend higher zone is 400 million, opened in trend higher zone, and like I said, just melted up all day and continued to push up into the end of the day. Market breadth opened in super trend higher zone. Gonna really bring this down. 1500 is usually the start of it. 2000 is a strong trend. We were up here in 2800, 3000 area. So internals were obviously there for the calls and to remain in them all day. So we were able to drag those out all day. Took profit on 75% of them at the end of the day. Let a couple of them swing. They are February 20th monthlies expiration, so not too worried about those over the weekend. But from a zoomed in perspective, that's what we got. Remember, I also told you that we needed a little bit of patience and a decision on what was going to happen on the 1 hour, because we did get a higher low, higher low yesterday, followed by a lower high. So it was going to be a question of, if we got another higher low, would we get consolidation, or would we get a higher high and a trend reversal to the upside, right? And so if we pull up the 1 hour, let's get a clearer chart here. We can see that, let's make this bigger so everyone can see, right? This was yesterday's price action where we got the higher low in comparison to the low on Wednesday. But we then got a lower high, right? So it looked like consolidation initially, and actually, got back into a downtrend with the lower high, lower high, lower low. Started a downtrend at the end of the day, but we were able to, basically break that, push up for this higher high, and then made another higher low up here with a higher high. So an uptrend has started on the 1 day chart. On the 1 hour chart. But it's pretty steep, and we're coming right into resistance, right? We've got this 4 hour downtrend line and the monthly broadening formation right here. Let's see, I did say I was going to show, no, it's not even there. Today. There we go. Here is those 1 hour downtrend lines that I was talking about back from the peak. In the middle of last week, right? We had the high, lower high, right? So that's that initial downtrend line. It got a little bit steeper. So that's the first one we ran into, and then that's the second one we ran into on Friday's price action, right? Looking at the 4 hour, let's go back here. Unfortunately, right, we still got plenty of room to set a lower high. Well, I don't want to say plenty of room, but there is a good amount of distance, about $5 that we have to still make a higher high in this sequence here, which is not necessarily, it's not starting an uptrend. If we do even get that higher high, it's just creating a broadening formation on the 4 hour time frame. So we came right into this 4 hour downtrend line, this monthly broadening formation. Probably would need a little bit of a gap up on Monday morning to get over those levels. Otherwise, we'll probably struggle with that, or not struggle. We'll have to resolve this level at the beginning of the week, and that may take a day or two, right? So we'll see. We may get the rejection, come back, test last week's 50% level, which also lines up with last month's 50% level, and maybe find support there. The month flip is there as well, so we may peak back red on the month before getting some type of bounce. But even if we do get a bounce, do we just run into this monthly broadening formation as resistance again? We do have this Let me just activate it so you can see it a little better. This 150 fib extension of the range from the end of the year, excuse me, that we basically bumped up against, and along with that monthly broadening formations. So then again, if we do push up even further, we do have the 200 fib extension of the April 7th bull flag that we've been using basically all year, and well, actually a couple quarters now. That could act as resistance as well, and that's still below this this high up here, which if we run into resistance there and get rejected, that would be a lower high as well. So that technically would keep the downtrend intact on the 4 hour. So although we did have a great day today, we're coming into levels of resistance, known levels of resistance. So we've got to just, continue to remain patient. Now, if we gap up over this broadening formation and downtrend line on Monday morning, then I would say, things are definitely continuing to look bullish, but we have last week's high and the 138 fib of the of last year's range, basically. That's up here as well, and those levels are overlapping as well. So, and if you look to the left, that is a level of resistance as well. So we still would need to break through that. Market makers' expected move high is, a bit above that. So that would imply that if we do make it to the top of the range, we would go 2 up on the week, which would set the higher low on the week. We'll look at that here in a second. Let's just look at the day real quick. So on the day, right, we did go soft lower high right here with this bearish engulfing candle, or this red 3 right here. This was a soft lower high, and we obviously went past a lot of these solid higher lows. So we do have a lower low and a soft lower high. So if we do go up, make a lower high, that would be a more concrete lower high, and I would probably draw some type of downtrend line there for the 1 day chart. So again, a little bit of patience is key when it comes to swinging things, right? If we're talking about intraday trades, obviously with the 1 hour flip into an uptrend, we do have that, but there is still a little bit that needs to be resolved to determine whether or not, from a 1 week perspective, a 1 day perspective, are we going to continue some type of uptrend, right? So on the day, really need to continue to push up at least past this soft lower high, and really try and press up before pulling back, so that we don't set that lower high. If we look at the 1 week chart, clean this chart up a little bit more. There we go. Right. We're looking at, if we go 2 up next week, this is just a higher low in the sequence of low, higher low, higher high. This would be a higher low. That would continue the uptrend, right? So, we talked about yesterday with the big drop that we had for, Wednesday and Thursday, it turned us neutral. We weren't, bullish leaning so much as more as just straight neutral, but we had not turned bearish yet. We made that clear from a 1 day, 1 week and up perspective, 1 day, 1 week, 1 month, the quarter, the year. From that perspective, we remained neutral to bullish on the higher time frames, and then just straight neutral from the 1 week and 1 day perspective. And this is why, right? This bounce back that we've had in SOXL was major today, and it possibly set us up to just continue the uptrend on these higher time frames starting next week. So again, we'll just have to wait for Monday to open. Be patient, let that 4 hour trend change back to the upside. It'll take a couple of days, more than likely, for the trend on the day chart to solidify itself as up as well. Because even if we do go make that higher high, again, we're coming from a lower low. So we're just looking at a broadening formation on the 1 day and 4 hour charts. But from the 1 week and up, things are still remaining pretty neutral at worst, to leaning bullish, right? So looking at the month, again, we were getting a little bit worried about possibly getting this 1, 2 up, 2 down. Now, again, we're still very early in the month. It's just, only finishing the first week of the month. So, could we continue to pull back up? Was this kind of a dead cat bounce today? Possibly. So there is still the possibility of this 1, 2 up, 2 down being triggered. Again, the magnitude for that move is all the way down here at 27, 28. So don't really want to see that trigger if you are a bull, right? Want the pullback that we had, over the last week to, be the worst of it and continue the uptrend if you are a bull. But just you need to keep in mind what is possibly on the table for this month, right? Again, if that does get down below, if we do get down below this 4508 level, go to fill this gap, that does trigger it. And again, the magnitude is not the low of the 1, but the low of the candle to the left of the 1. And again, of course, there's a gap right at the magnitude there as well that could continue momentum into a couple more gaps that aren't too much further away. So just really need to keep that in mind. All right. On the quarter, we talked about how we ran the STRAT, right? We had the 1 combo 2 down, combo 2 up that triggered, reached magnitude up here at 70.08. So again, nothing else to go for at, on the quarter except for some, extended targets. But from the perspective of, the STRAT reversal, it has been run, it's completed. So again, this pullback isn't, out of the ordinary there. And the same goes for the year, right? We had this 2 down, 2 up that triggered, if not the first day of January, the second day. But again, magnitude of that move was 70.08 and we reached it. So the pullback is nothing, nothing to be, it shouldn't be shocking or anything like that. So, that's what we've got from higher time frames. Again, the 1 week chart, I'm neutral to bullish leaning. Same probably with the month, just because it's still an inside month. We haven't gone 2 up yet, so there is still that possibility of the 1, 2 up, 2 down on the table. But from everything else, I'm not bearish, right? So on those higher time frames. But again, just continue to play those shorter time frames, knowing what the trend is on the hour, especially intraday. That is usually the tell, right? When we make those lower highs. When we made the lower highs, and lower lows, that when the trend first got started, we dropped hard. But since then, we've made that higher low, made a higher high, and you can see how prices shot back up. So we'll see how things continue to go. That's our zoomed out view. Let's go ahead and take a look at the market makers expected move for the week. Let's go ahead and bring up the day chart. All right. So again, I was talking about, let's pull up the week chart, and we can see that would imply that, let's make this bigger so everyone can see it. There we go. So this is last week's candle, and the market makers expected move high. If we were to get there, or if things are bullish, it would imply that we would go 2 up next week, locking in, this week as a higher low in the trend sequence. Even if we were to go down to the market makers expected move low, that would still keep us within the previous week's price action. So it doesn't imply that we could pull a 3 on the week, or a bearish engulfer, or bullish engulfer, depending on how it closed. But it does imply that we should, at the worst, run sideways, but at best lock in this past week as a higher low, right? And the way that we get that market makers expected move, let's pull up our chart. There we go. If we go to the options chain and we look at, February, let's get the right one up here. If we look at the options chain for February 13th, we go over here to the right, there is a number in parentheses that's plus or minus 8.472. What that means is that there is a market makers expected move of plus or minus $8.47, right? So if we go back to our notes, all right, so for Monday, February 9th, there will be 226 trading days left in 2026. The close price on Friday was 61.75. We don't know what the week flip will be yet, because the week hasn't traded yet, and we do know what the month, quarter, and year will flip red. The month flipping red at 59.51, and then the quarter and the year obviously flipping at 45.13. The expected move, like we talked about, is $8.47. So if we add that to 61.75, that gives us an upper bound of 70.22, and then if you subtract that 847 from 61.75, that gives us a lower bound of 53.28, right? So if we go back to our charts here, that's how we get that get those numbers, and that's how we can visually put on the chart to see what is expected from the market makers at least, right? And that number is derived from a straddle on the at the money options chain on the options chain. So that is a calculated number. I keep forgetting to put out a video that shows how to calculate that on your own if you'd like, but maybe we'll do that this weekend. But anyways, that's how we chart that or get that number, and that's how we put that on our charts, right? So 53.28 and 70.22, that's the expected range for this week's trading, right? So with that in mind, let's go ahead and take a look at the short-term time frame to talk about how we will attack Monday morning, and then we will continue to speak further about the higher time frames and look at how we will attack the week, right? So just looking at the chart here, we got a big day. I'm trying to make sure I get all of the 4-hour markers on the chart. There we go. So we'll start out like we always do with market makers expected move. The previous high a day up here at the top of the chart. Overnight high for right now 61.95. Overnight low for right now 61.23. Obviously those two will more than likely change before price opens on Monday. And then we've got our previous low a day down here at 55.67, and then we've got our blue shaded area just below that to show that we do have a gap there. Some honorable mention levels. The green dash line is last month's 50% level. The the purple dash line is last week's 50% level. And then we have the month flip as well. So 59.51 is where the month would flip red if we go below it. And, as of right now, we're above it, so we're green. Take a look at the upper left-hand part of the charts here. We've got the time frame continuity indicators, and you can see the week finished green, but the month, quarter, quarter, and year are green. So we do have full time frame. Excuse me. Got a little bit of a cold here. We do have full time frame continuity to the upside. All right, so just looking at that, let's say we get a little bit more drawdown over the weekend and after hours, and maybe we find support at the month flip. So we've got a little bit bigger range overnight, and maybe we open price on Monday a little bit closer to that overnight low than we do overnight high, right? Using the proven and repeatable strategy that we use, knowing what our 4-hour markers being our previous high day, overnight high, overnight low, and previous low day, we know where our targets are and we know where our starting point is. So if we do get price opening print down here, and maybe we push up, maybe we hit overnight high and we get a pullback, but we do get a higher low at or above this opening print level, we want to look to get into calls. And our first target is going to be overnight high, second target being previous high a day. Obviously not a lot of distance between those two, so you could kind of call it one level. Those do coincide again with that monthly broadening formation and the 150 fib of the range at the end of 2025. So decent level of resistance here. We've got the 4-hour downtrend line coming through here as well. So just keep that in mind, that we could get up to previous high a day and either move sideways or get even more pullback. So just keep that in mind. But, again, the rule is higher lows at or above opening print. Look to get into calls. If we do get price action that pushes down, maybe we get a bounce off of last month and last week's 50% level when we push up, but we get a lower high at or below that opening print level, we want to look to get into puts. First target being overnight low. Well, more than likely you'd probably be already below overnight low at that point. But if the lower high is right at opening print, technically you do have the target of overnight low. Not enough magnitude really to get any profit. So either way, if this is how things look when we open on Monday, not a lot. Probably take overnight low out of the picture, and then your ultimate target is previous low a day. Now, you do want to keep in mind, just like with the upside, we have the monthly broadening formation. We got the 150 fib extension. We got the 4-hour downtrend line. Just to like that to the downside, we've got last month and last week's 50% level. Right, we've got the 161.8 fib of the April 7 low bull flag, right? So do keep that in mind. We may not get all the way back down to previous low of day, but if we do get to previous low of day, also keep in mind that we have the gap down here. So and it's not a very big gap. So that could be a magnet for price on Monday, just to fill that gap, so that we can get that out of the way and see where price is going to go for the rest of the week, right? But again, higher lows at or above opening print, look to get calls. Lower highs at or below opening print, look to get into puts. All right. Let's go to the 4-hour charts. We can look at things from more of a day trade perspective, and there we go, possibly overnight swing perspective. Let's get everything on the chart large enough so everyone can see. There we go. So we can see on Friday we had a 2 up, 2 up, technically triggering a 2 down, 2 up, combo 2 up, I guess you could say. But it's really messy. So not the cleanest STRAT reversal in here, but there is a STRAT reversal. And just to make things even messier, because we did reach the magnitude of that STRAT and continue pushing higher, it did technically trigger this 3 combo 2 down, combo 2 up, with the magnitude back here at last week's, or the previous, this whatever week that you want to call it, because it's Saturday, Friday, same week, whatever. This week's high, right? 67, 62 is the magnitude of that move. So it would be another big move on Monday if we were to continue that STRAT reversal. Now again, monthly broadening formation, 200 fib extension of the April 7 bull flag right here as well before we get up to that level. But definitely a possibility. I mean, because we are in that STRAT reversal, that would complete. Even if it didn't totally reach magnitude, you want to keep that in mind as well, because if we do get the reversal just below the magnitude, that would still give us a lower high on the 4-hour, right? Now on the flip side, to the downside, there's also a reversal on the table, but it would take a little bit more to get there, right? So or it'd take a domino effect to get the larger move, I'll say, right? So we have a possibility of a 2 up, 2 down that would trigger at the low of this 2 up, and the magnitude would be the low of this, the 2 to the left of the 2 up. So there is a lot of magnitude there. But again, draw your attention to the month flip, last month and last week's 50% level, the 161.8 fib of the April 7 bull flag. Got those as levels of support coming down. But if we do break, through those levels and reach magnitude and then dip into this gap, that does technically trigger this 1 combo 2 up, 2 down. Right, and the magnitude of that is not the low of the 1, but the low of the candle to the left of the 1. So that would bring us all the way back down to the week's lows, last week's lows, the week of February 6th lows, I'll say, just to make it more clear. So, again, we're not out of the weeds. We've got resistance above. We got support below. We're in the middle of the range, and I've talked about it, especially in a couple of videos last week. It's the middle of the range is not to where you make your big moves. It's at the edges, right? So once you get more towards the top of the range and the bottom of the range, those where you either buy calls to get back to the top of the range, or puts to get back to the bottom of the range, or you would buy puts if you feel like we're going to drop out of the range at the bottom there, or you'd buy calls if you think we're about to break out, right? So the edges are where you make your bigger moves. Inside of those edges at this point, it makes it a little bit more difficult. So again, the patience is the key. The 1 hour, keep your eye on. The 15-minute may be actually what you need to keep your eye on for Monday, since the 1 hour finally has flipped. And then the 15-minute will be key to determine, are we going to get continuation on that 1 hour uptrend? Because we need to know, are we going to get continuation on the 1 hour uptrend to keep things going on the 4 hour? Because we've still got a ways to go to make that higher high on the 4 hour. So the 4 hour trend could still be down at this point. It is at this point, and we haven't broken it, but it could still be down. Even if we get a little bit of upside price action Monday morning, if we get pulled back, mid-morning, late, into the afternoon, we're just still making this lower high. So keep that in mind. Let's go ahead and look at the day chart. Clean this chart up a little bit more, right? So we did trigger this 2, 1, 2 up, and it did reach magnitude today. Let me make this bigger here. There we go. So this 2, 1, 2 up. The magnitude was the high of the 2 here. So We did reach magnitude and technically did trigger this 3 combo 2 down, 2 up, right? And the magnitude of that move is, again, last week's or this week's highs, this past week's highs, 67, 62, is what that would put us back up to, and would give us an equal high on the 4 hour, and equals this soft lower high on the 1 day. So definitely a bullish move if we do make that move up there on Monday. And it would put us more towards the top of the range of the market maker's expected move. So we'll see how that goes, but we would still have a little bit more to go. That 71.98 level is going to be, the next level of major resistance, I believe. It's kind of a, I don't want to say exhaustion top there for the bulls, but the resolution of that level is going to be key, right? We've got a lot of weekly broadening formations up here. If we do continue the push up, I don't know that it's going to be as, momentum filled or as, straight up as we've had it over the last few months, right? It may be more of a grind. So just kind of keep that in mind. But anyways, just continuing on with the day chart. If we talked about price action to the upside, triggering this 3 combo 2 down, 2 up. If we go to the downside, if we go below Friday's low, that does trigger this 1, 2 up, 2 down, which brings us back down to the week of February 6th low, right down here at 49.33. So again, middle of the range. We want to see if we do get downside action, though, that does bring us back down to the bottom of this range that we've been dealing with. So that's the edge that I was talking about. And then, we get a better chance at a bigger play, either if a bounce triggers at this point, we look towards going to the back to the top of the range, at least the middle of the range at the very least. But if we fail that bottom of the range, then, do we start trading back into the range that we were in at the end of 2025, right? And they say once you trade a range and you go outside of that range, either to the top or the bottom, you usually double the range. So let's just I'll just draw a box here, right? That's the end of the range, or that's the range for the end of 2025, right? And if we double this and move it over here, right, we basically, reached that top of the range. So we're back towards the bottom. Are we going to bounce here? Or did we bounce here? Yes, we did. We're back at the middle. If we do reject here and get back to the bottom of the range, the question is going to be, are we going to fall back into the previous range or bounce back up to the top, right? So that's how things look from the 1 day chart. Let's go ahead and remove these, and we'll go ahead and look at the notes again. We've been looking at the charts quite a bit, but if we go to our notes, come on now. If we go to our notes, right, we talked about where the gaps are, right? Don't have any above right now, but we know that we've got plenty below. And actually, I forgot to mark in the new one. So let's look at that. Where was that? Yeah, here we go. 55.67 to 55.49. 55.49. All right. So we know where our gaps are below. Don't have any gaps above. We talked about from a early morning scalping perspective, or an early entry into a longer day trade. We want to look for higher lows at or above the opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. Obviously, the targets for the upside are overnight high and previous high a day. Targets to the downside are overnight low and previous low a day. We talked about on the 4 hour, if we do get price action to the downside, that triggers a 2 up, 2 down. That does, we forgot to mark in 1, 2 up, 2 down as the extended, right? So initially we could get the 2 up, 2 down, triggering at 60.87, magnitude being 55.67. So pretty large move there. But that would then again trigger the 1, 2 up, 2 down. So we do have the extended target out here of the gap close on the 4 hour. So again, a pretty large move, $5 move marked out on the 4 hour time frame. But with the big swings we've been having over 4 hour chunks of time, we do need to have those out there. To the upside, if we do go to the upside, we just trigger this 2 up, 2 up continuation at 62.25. But that does put us in this combo 2 down, 2 up. with a magnitude of 67.62. Now again, we're in the middle of the range. The 4-hour and the 1-day are still technically in a downtrend. We did turn around the 1 hour, but the 4-hour and the 1-day are still in a downtrend technically. So we do have these intermediate targets on the way to the magnitude on the upside. All right. We did talked about on the downside on the 1-day chart. If we do go below Friday's low, that triggers this 1, 2 up, 2 down, triggering at 55.67, magnitude of 49.33. If we do make it down there, we do have the gap close at 48.09. The major resistance of 2025, especially the end there, 46.79, and then an extended target of 45.13 out there for you. On the upside, if we do go to the upside, we triggered the 3, 2 down, combo 2 up at 62.25, magnitude 67.62. Again, 4-hour and 1-day technically are still in a downtrend, so we have those intermediate targets out there for you. And then if it does reach magnitude and it wants to keep pushing, we do have the extended target of 68.56 out there. Right. On the week, if we do go to the downside, that continues this combo 2 up, combo 2 down, and then if it reaches its magnitude at 48.13, that then triggers a 3 combo 2 up, combo 2 down, with the magnitude of 42.01, and then we've got these intermediate targets on the way down there as well. If we do push to the upside, that gives us a 2 down, 2 up, locking in a higher low on the week chart, continuing the uptrend. That triggers at 67.62. Magnitude of that move is 71.98. And then we've got obviously the extended targets out here, 74.21 being all-time high. So we want to just see things continue to push to the upside if you are a bull. We talked about on the month chart, we're still an inside month. We'd have to get all the way down to 45.08 to trigger the 2 down on the month, which would trigger a 1, 2 up, 2 down. Magnitude of that move being all the way down at 28.12. But again, we've got to get down to that 45.08 first. So we'll see if we do continue to pull back at all and get these lower highs on the 4-hour and the day chart. This could be coming back into the picture. But if we do continue pressing to the upside, it would take 71.98 to trigger that 2 up continuation. And of course, since it's not a reversal, it's just a continuation. We don't have a magnitude for that move, but we've got the extended targets out here for you. We talked about on the quarter, we triggered and ran the STRAT for the 1 combo 2 down, combo 2 up. The magnitude was 70.08. So again, not a surprise that we're getting the pullback here, but if we do get things back together and continue pushing to the upside, we've got 74.21. Again, that all-time high is the first extended target, and then we've got some more listed out here for you once we get into blue sky territory. On the year, again, we ran the 2 down, 2 up reversal. Magnitude was 70.08 as well, and at this point, we're just looking to continue pushing up, breaking that all-time high and getting into blue sky territories, right? So there you have it. Those are your triggers and targets for everything ranging from the 4-hour scalping time frame all the way up to the 1-year chart, right? Tried to put in as much information as we could without taking up too much of your time. So we do hope you enjoyed it. If you did enjoy it, think about giving it a thumbs up. It doesn't cost anything. I think it's a pretty good exchange for a free video that provides some pretty good information out there. But that's just our opinion. Anyways, if you did make it this far, like we said, thumbs up goes a long way to help the channel. We're just out here trying to make trading a little bit easier for folks. Again, this trading method doesn't work just for SOXL. It works for any publicly traded company in the U.S. stock market. So keep that in mind. And, if you do feel as though this would help somebody, give it a share. But we'll go ahead and wrap things up at this time. We'll just wrap it up at this time. If you're watching this, Saturday or Sunday, we hope you are having a great weekend, and we hope you get some good rest Sunday night. Wake up refreshed on Monday. If you're watching this Monday morning or Monday during the day, we hope you got some good rest over the weekend, had some fun maybe, and woke up this morning refreshed and ready to trade. So if that's the case, we look forward to getting out there and trading with you.